Good morning, viewers, and welcome to the 24th episode of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Sha Financial Services, a financial planning firm. And with me here today in the studio is Mr. Lalit Abichandani CPA, and he's going to be talking to us about what we need to look at in terms of taxes in the new year. Let me first give a brief introduction about Lalitji. He's a practicing CPA for the last 25 years. He has his practice in Manhattan and is running a very successful firm. They provide tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm services healthcare industry, IT industry, hospitality and entertainment industry. He has done hundreds of offshore voluntary disclosure statements and streamlined procedures, and has become an expert in foreign bank account reporting, FBAR, and the US-India tax treaty. He's a CPA and tax advisor to businesses, professionals, Bollywood industry, and a lot of personalities. So viewers, last time we wished you, and I'd like to wish you again a very happy new year. And as we go into this year, I'd like to first say that we have an automatic reminder. The new year comes in, the W-2 start coming in, and the 1099 start coming in, and it's time to file taxes for both individuals and those who are self-employed. All the other tax documents, you start gathering them together, and then you look to your CPA. So Lalitji, what can you tell viewers about in this particular scenario, about what they should do and how they should start preparing themselves for the days ahead?
Thank you very much for a great introduction, Paresh ji, and Happy New Year to you as well as to viewers. Wish you a very happy and prosperous New Year's. Paresh ji, you are absolutely right. As the new year begins, the tax documents start flowing in. The businesses have to start closing their books. Whatever updates are necessary, those are important to be done. It is good to start early in this process. This way you know what has to be done, and you can start planning and looking at your tax exposure. And of course there are estimated taxes to be paid by January 15. So it's very important to start early in this process, especially for self-employed and businesses. Before we even go to the actual tax savings, it is important to look at the data that you have to analyze and look at your tax exposures, and then we start looking at the deductions.
Okay, so Lalitji, let's analyze businesses first. In a previous episode, we covered entity formation, and we've also covered taxation of C Corps, S Corps, and LLCs. Before I ask you what is the real rate of taxation on businesses, can you please summarize for us the basics of the C Corp, and then of course we'll go to the S Corps and the LLCs, but let's just first start with the C Corp. Tell us the basis of summarize the basics of the C Corp taxation.
So Paresh ji, as we discussed before, and you just rightly said, there are 2-3 different types of entities. To start with a C corporation, when you incorporate a company, you are a C corporation, and by default it is a corporation, so the corporation pays taxes. And again, when you withdraw money from the profits that you have generated after paying tax, that distribution is taxed again. So C corporations are affected taxes twice, and it is known as double taxation. So you do pay you pay taxes twice in the corporation. This kind of setup is designed for bigger companies where there are thousands and millions of investors. For smaller companies in this country, it is more efficient to be either a S corporation or even an LLC. In a C corporation, you end up paying taxes at the federal level as well as at the state level. So that adds up to almost 45–50%. And then again on distribution, when you're paying taxes on dividend, that could be another 15%. So the rate of taxation, if you combine the two types of taxation, adds up to, in some cases, more than 50%.
So from what you're saying, I understand, Lalitji, that because of this nature of double taxation that is going on, C Corps are not the most advantageous to small business owners. It's usually their S Corps and LLCs. So if with that in mind, tell us about the taxation of these S Corps and these LLCs, you know.
So the other option in this country that we have is S corporation and LLC. So they are known as flow-through entity. So what does that mean? That means that when you have a S corporation or an LLC, the profit is not taxed at the entity level. It gets transferred to your personal tax return, where you add it to your other income, and you have an opportunity to do deductions or exemptions or contributions to deferred compensation, and thus reduce your taxable income. So you do have these two types of entities are favored because the effective taxation is much lower than the tax on C corporations, for example.
So I get it now that one is like a what we call a flow-through entity.
Right.
The two, that means the S Corp and the LLC is a flow-through entity, while the C Corp is an entity in itself, so it's taxed at its own rate and there's double taxation. So that's the major difference between the two. But then again, if there are two separate things like S Corps and LLCs, then effectively even they will have some differences between them. Can you further split it up and talk about the differences between the two, you know?
You're absolutely right. I mean, things are not that easy. Obviously, they have a different character. Each one, LLCs by default are partnerships, and S corporations are really an election. From once you form a corporation, and then you have to elect to be an S corporation to be making into a flow-through entity. So in an LLC, I'll start with an LLC first, which is by default a partnership. So in a partnership, partners generally don't need to take salary. The net income out of partnership is taxed 100% at the profit level. In addition to that, you also pay Social Security on the entire net income out of this partnership. So whoever the partners are, at their level, they have to pay the Social Security. Compared to that, in an S corporation, if we have the same profit coming out of S corporations after taking salary, in an S corporation, the officers or the owners of the company have to take some salary, and after taking the salary, the net profit that you have is not subject to self-employment taxes. And Paresh, as you know, the self-employment taxes are 15.3%. So between the two entities, the LLCs and S corporation, the S corporation is preferred from a tax point of view or the payment of the Social Security point of view. So you have a savings of 15% plus in an S corporation, comparing with the exact same profit between the two entities.
Wow. So essentially, again, if I may just summarize it very quickly, and if I get it technically wrong, please forgive me. But one is a C Corp where it is taxed at the business rate, and then again on distributions, the individual will pay taxes on it. Then the second will be S corporations, where on the salary component you pay the Social Security taxes also, but and the match and the employer contribution. But in LLC, you'll pay it on the entire income, not just on the salary component. I know there's a lot more to this, but I just thought I'd summarize these couple of differences. So let's talk about now what is a net rate of taxation. This is something that confuses most people, and let's talk about businesses first. Tell us what is the real rate of taxation on businesses?
So in all of these different types of tax entities, be it C corporation, LLC or S corporation, there are different rates. So I'll start with the C corporation, for example. So in a C corporation, the first $50,000 of net profit in a company is taxed at 15%. The next 25,000, in addition to the 50,000, the tax rate goes up from 15% to 25%. And then the income over 75,000 to 100,000 is taxed at 34%. And any income over 100,000 in a C corporation is taxed at 39%. If your income is 150 or 200,000, the 200,000, effectively you're really paying 35% at the federal level. Of course, in addition to federal tax, as you know, most of the states in this country, they charge state corporation income tax as well, and that could be from 3% to as high as 11%. So it adds up. It adds up to the federal. So you're paying 35% at the federal level, and 3 to 11% at the state level. And if you are in a city like New York, where even New York City charges you 8.85% or 9% of corporate income tax. So all in all, it can add up to over 50% of taxes, which of course lately, as you know, the president-elect is very upset about that, and she's trying to lower the rate from 35% to 15% for the corporations at the federal level.
I mean, it is really punitive. I mean, you are taking all the risk to generate income in the business, and because you're in the business, it is possible that you may not actually generate income, but you may lose money. And on top of it, when you make money, you pay 50% out of it just at the corporate level before you take it into your own personal hands. I think it's very heavy, and looking forward to probably a lower tax regime. But let's go back to the personal tax slabs and the things that you talked about on the business slab. Can you elaborate a little bit on the personal level, what happens?
Yes, Paresh. So we talked about the C corporation rates. Before I come to the personal rates, please understand that the income from S corporation and LLC that comes into a personal tax return, you have an opportunity to deduct additional deductions or exemptions or tax credits, or in some cases even contribution to deferred taxation. So your taxable income is substantially reduced from these profits coming from the company. So once you have that taxable income, this taxable income at the personal level, the government has 7 different slabs. The lowest slab is 10%. So the first $10,000 or $15,000 of taxable income is taxed at 10%, and gradually it goes up from 10% to 15% to 20% to 25% to 28% to 33% or 35%, and then 39.6%. If you're making over $500,000, then you effectively start paying 39.6% on an income above $450,000, $500,000. Of course, in addition to that, just like state charges tax on corporations, there are also personal income tax at the state level, and that can vary from 3% to as much as 10% in California or 9% in New York. So that adds up as well. Also, again, at the city level also, for example, New York City charges New York City income tax. So it adds up to almost 40–45% of taxes on that taxable income that we arrived at.
Lalitji, we are falling really short on time, so I'll give you a last quick question. Give me a short answer on this one. What advice would you give our viewers, because these high rates of tax are really affecting our lower and middle classes, you know?
So as I started saying, that the planning is very important and early start is very important. Gather all your documents and sit down with your tax accountant and go over preliminary to see where you stand with and what possibilities there are before you start filing the tax return. Don't wait till April 15 to go to the tax accountant, because he really doesn't have time to effectively do a good job for you. So January is a good time to go to tax accountant and sit down and go over your finances with him.
Well, viewers, as you can hear from what Lalitji is saying, taxation and getting the best or out of what you have made, keeping maximum with you is a complex thing. Lalitji has in the past shows talked to us about possible tax credits and possible tax deductions that we can take advantage of. So in all of this, all I can say is sit down with a good professional. Lalitji is always willing to help our viewers. Several of our viewers have called him with all their questions. So if you need to reach out to him, his email is lalitcpa@yourtaxadvisor.com, and his website is yourtaxadvisor.com, where you can look up his number and give him a call. He'll be very happy to help you. Once again, viewers, it's 2017. We'll wish you a very great year as you go along, and an enjoyable tax season, if at all there's something like that.
Thank you very much, Paresh ji, and we'll be happy to help our viewers if they call us or send us an email.
Thank you.
Thank you.